Hey guys, hope you're doing well today and hope you're keeping safe where you are. I wanted to give a quick video to you today just to kind of talk through some of the questions that I've been having. Honestly, a little confused and trying to work out and understand why the market's doing what it's doing. So let's take a look at it together here quickly. This is the S&P 500 since the start of, for the last calendar or 12-month period. And here we are in January, running up all the way to February, and then this dramatic drop that we had in just under a month to mid-March of almost 30%. Major bear market. Now we've seen a 20+% growth on that money since late March. So we've seen this incredible, I don't know if it's a dead cat bounce, as some people say, or if it's the return of the bulls, who knows, right? It's very difficult to tell the future right now. It's a very volatile last month or so. We are 14% down on the year for the S&P 500. And one thing I wanted to kind of talk through was the similarities both to the Great Depression's false recovery, which we looked at on a previous video, but also wanted to look at the last recession and some of the indications that there may not be a free path to growth for our current charts right now. So let's take a look at that together. Okay, so what we're looking at here is October 2007 to probably May 2008 with a negative 8.9% in the S&P. And you can kind of see that long tail down followed by a false jump as the data was coming out for the housing data in 2007, 2008. It was getting weaker and weaker, and more people were defaulting on mortgages, and some subprime mortgages were going belly up. And so this was sort of this false recovery from what could be March to April, mid-April here, of 10, 11 years ago, and or 12 years ago. So this is this interesting run-up that we see in our similar jump right here. I don't know what the future holds. Again, I'm not predicting the future, no crystal ball, but it is eerily similar to see this kind of jump down and then a bounce up as the spring warmer weather kind of melts away fears and brings optimism. We have had reason for optimism with OPEC and all the stimulus checks going out and small business loans. But notice what happened after April 2008. Of course, the S&P 500 just fell apart. As you can see, there's that little jump up right there in April 2008, and then it just fell apart, collapsing over the summer and into the fall and into the winter of 2009 and into March of 2009. We see a negative 52% jump from from the start to the finish there. So again, that's a dramatic drop. I don't want that to be your story with your money losing half of its value for this run. Now, Warren Buffett, a famous investor, says, be greedy when others are fearful and fearful when others are greedy. So if everyone else has been running up their stock, as you can see, if they've been buying and buying right now, this sort of greed hill here, then I was really interested, and part of the reason why I wanted to do this video was an article on MSN.com and the Motley Fool saying, why is Warren Buffett selling so many stocks? He's a famous, very intelligent investor, runs Berkshire Hathaway, and on April 1st and 2nd, he sold 13 million shares of Delta Airlines. Southwest Airlines sold those shares as well, 2.3 million shares. And later this last week, he also sold another almost 860,000 of financials, which the financials and the banks look very weak right now as well. And that to me says if everyone else is buying and buying right here, but Warren Buffett is selling and selling, we should probably take notice of that. Again, there's some reason to be fearful when others are looking greedy. So I don't know, again, the next step in this market. It's hard to tell, very murky, very volatile, but do invest with caution right now and take a note from sophisticated investors like Mr. Buffett and others to be fearful when others are greedy and greedy when others are fearful. So hope you guys are doing well and staying safe, and we'll see what the future brings.